Okay, well, I'm going to look at Warren Buffett's final missive, his final letter at the helm of Berkshire Hathaway. Essentially, it's an end of an era, delivered in the form of a Thanksgiving message. It was kind of transcended the typical shareholder communication. It functions kind of, in my opinion, as a codified cultural document, establishing enduring governance principles and reinforcing the ethical foundation of Berkshire Hathaway in the post Buffett era. He gave a definitive handover and leadership endorsement. The letter provides an unreserved and powerful endorsement of his successor, Greg Abel, a Canadian, I may add, and was designed to specifically instill confidence among Berkshire Hathaway's shareholder base and the broader financial community. I'm going to read a couple quotes that really leads me to say that it is that type of document and this type of endorsement. They're from Warren on Greg, quotes on leadership. I'll quote him. Greg Abel will become the boss at year end. He is a great manager, a tireless worker, and an honest communicator. Wish him an extended tenure. He said, Greg Abel has more than met the high expectations I had for him when I first thought he should be Berkshire's next CEO. I can't think of a CEO, a management consultant, an academic, a member of government, you name it, that I would select over Greg to handle your savings and mine. So again, this is clearly establishes confidence in Abel, and he clearly is taking over. So those things were clearly identified in the letter. Buffett also gave some great financial and really life advice, which we can touch on kind of next week. This week, I thought it would be good to look at Buffett's capital allocation as Berkshire's and over Berkshire's latest quarter, specifically in the equity portfolio. So let me share my screen and bring that up. So this is Berkshire Hathaway's Q3 2025 capital allocation and portfolio review. I'm going to start off by looking at some key takeaways from the 13F filing for the period ended September 30th, 2025. Essentially, what Buffett is buying and selling. Well, there is a net seller posture here that continues, has been really continuing over the past year plus. Q3 2025 was characterized by net equity selling, reflected higher value discipline. Warren sees the markets generally, I think the way we see the markets generally, right now you're at relatively historic high levels in terms of valuations. If you look at some of the metrics, we use the Shiller PE often. It is at or near all-time highs. So you're using a very disciplined valuation approach, and you're likely seeing, particularly at the high end of the markets, an inability to deploy capital at the rate they would like to deploy it, but they are happy to be disciplined and keep to their valuation parameters and not buy just for the sake of buying. And Warren Buffett definitely has the clout to do that. So estimated gross sales, as we can see here in the quarter, were 13.1 billion. Purchases about 5.2 billion. So the net sales 7.9 billion approximately. Portfolio value right now sits at 267.3 billion. Berkshire has more cash than that, just sitting there waiting to be deployed. There was capital recycling, proceeds from trimming concentrated positions in Apple, for example, immediately recycled, not fully, but recycled some of it into strategic growth and core business fortification. New purchases we'll go over in a second. Alphabet and Chubb was also added too. Here's a quote from Buffett. Our stock price will move capriciously, occasionally falling 50% or so, as it has happened 3 times in 60 years under present management. Don't despair. America will come back, and so will Berkshire shares. It's kind of a warm hug for worried investors from the outgoing Buffett. Let's look at the major strategic additions, or what Buffett was buying in the quarter. The quarter's purchases were highly targeted towards technology diversification and reinforcement of the core insurance business. As we can see here, Alphabet was the major purchase here. Aggressively entered into this wide moat digital AI technology, diversification away from hardware heavy tech concentration. Alphabet is a stock that we have recommended and owned for 7+ years now with great success. We are happy to see Warren Buffett is now aboard. Better late than never. The stock moved higher near all-time highs on the news. Warren Buffett has famously talked about Alphabet in the past as a company that he quote unquote missed. He saw the profit potential of the business, but late to the game, if there's growth potential, trading at a reasonable price. And it kind of aligns with them looking for value in an overheated market. Alphabet still has value trading at, say, 23, 22 times fiscal 2027 expected earnings with solid growth. Chubb was also, they increased their stake here, significant commitment to PC insurance core, leveraging insurance float generation its generation capacity. So we can see they added to that. There was a small addition as well to Domino's Pizza, incremental allocation to a high quality capital light consumer brand. Let's look at the notable deletions. Capital was actively recycled by trimming over concentrated or cyclically exposed positions in the quarter. Apple, there was some concentration risks here. They trimmed 9.6 billion. Concentration risk, obviously, the biggest position by far for years now has been Apple. So they trimmed that, recycled capital from high value holdings. Berkshire Hathaway began selling Apple stock in the fourth quarter of 2023. A small reduction there was noted in the 13F filings for the quarter ended December 31st, 2023. However, the sales became much more significant in the following quarters. For example, a larger cut was disclosed for the second quarter of 2024, and the selling has continued through recent quarters. Bank of America reduced ongoing tactical reduction of concentrated financial sector exposure. They also reduced in VeriSign, reduction in legacy technology services company, reallocating that towards Google. There was also a reduction in DR Horton, exited from capital intensive cyclical home building industry exposure here. Let's look at the concentration, which is always eye-opening in Buffett's equity part of Berkshire Hathaway's portfolio. The strategy remains defined by extreme conviction and concentration. If we see here, the top 10 holdings account for an estimated 86.69% of the total reportable equity portfolio. Alphabet immediately entered the top 10 list in 10th position here. So this was a significant buy. We'll see if they add to that over time. The behemoth is Apple, even with the recent sales. American Express at 18.89% is a significant position as well. Even if we just look at the top 5 holdings, it's impressive. I mean, it is concentrated to see it's almost 70% of the portfolio is just in Apple, American Express, Bank of America, Coca-Cola, and Chevron. So certainly no over diversification. He has, if he has high conviction on a stock, he is definitely buying and will continue to hold that company, even add to it over time if it continues to perform. My quick conclusions here. The rotation, Apple to Alphabet and Chubb demonstrate a proactive approach to balancing risk, reducing Apple concentration. There's still high level of concentration, but it is reducing with high conviction fortification in Chubb and some modernization, relatively speaking, to the portfolio with Alphabet. There's still the Munger legacy. If you read through the note, the management style remains collaborative and ego-free, following the core cultural standards. Buffett said, "We had differences, but we never had an argument." "I told you so" was not in his vocabulary. It's great to see that that is the plan to continue with Berkshire, because it's been a highly successful model over the long term. There is our disclosures. Next week, we can talk about a little bit of life advice from Mr. Buffett, as well as he exits a full-time role at Berkshire. it's certainly the end of an era.
For sure. Yeah. And just like that ego-free culture, I think that it's so important to investing, because like literally one of
Huge,
the
very hard to
biggest,
achieve, but it's amazing if it can be done. And you can,
for
and then
sure,
he credits that for a lot, working
it's
hard
huge.
helps. It credits that with, and being incredibly smart helps, but, ego free. I mean, the markets will hand yourself your lunch, but you will do incredibly well. And if you think you're the greatest at it, that can be just as harmful, having overconfidence. So
Yeah.
you got to have your
Yeah.
courage of your conviction, but,
Yeah.
have confidence in that as well, but also know that you can be humbled and maybe humbled in the short term, but you need to have done your research ahead of time.
Exactly.
Yeah. Smart people lose money all the time. It's
Yep.
nothing new there. So it's one thing just being smart in the market. You also got to be strained. But the other thing I just want to mention is Coca-Cola, 10% effectively of his portfolio, or of Berkshire's portfolio. 1988 was their first purchase. Decades of holding effectively.
Yeah.
And it's just, most people though will tell them we're looking to hold for decades. That is ultimately what you want to do. Not all his holdings obviously are. Apple wasn't until I think 2016 or something similar to that. But still, 9 years, almost 10 years at this point. And it just shows that you can have these concentrated positions, hold for long term, and beat the market.
Yeah.
And obviously an outlier, but it can happen.
Yeah.
Yes.
Very impressive.
One thing too, like going back to like the stoic and ego free, like I've said it so many times, and I've said it in our 10x webinars, but the great Mark Twain quote, because again, being a know-it-all investor is so dangerous. Again, you have to go into, this is my investment thesis, sticking to it, but understanding that, things can go wrong, things happen. But Mark Twain, I've said it a couple times on the podcast before, but it ain't what you don't know that gets you into trouble. It's what you know for sure that just ain't so. And that is such a good quote. I love that. I've said it multiple times, but yeah, and last thing too is Greg Abel. I think it's very interesting. I believe he was born and raised in Edmonton, so pretty close to me.
Yeah. I'm sure some of that acumen just rubbed off into
Yeah.
Saskatoon or Prince Albert, and then right onto you.
It would be cool to do an investor spotlight on him as well. I think
Yeah.
that would be an
Topical for
interesting
sure.
segment on the podcast in the future. I'd love to dig into him as well.
Yeah. Well, thank God the quotes will live forever, but it is the end of an era. Buffett, I'd read an article saying like some of his comments through some of the most turbulent times were like a warm hug for the markets. And he's done that historically. At some point we won't have him here to do that, but hopefully his successors and mainly us can provide a warm hug for the market.
Yes.
That's what we're looking for. It's our new mission statement. We are a warm hug for the markets.